How to make money predicting the stock market using AI. We will be using something known as the ARIMA or the Autoregressive Integrated Moving Average Model. This is a simple prediction model used to forecast stock trends. This model will be used to predict the opening price of the stock and evaluate how well the stock performs the next day. This can be helpful if you are using stock options as your primary source of trade. Let's get started. We will be using Spider IDE and Anaconda to achieve this. Click in the link above to see how to install it. The first thing we want to do is to download the data. We will be using the S&P 500 data from the website in the link below. Then, we would want to clean, prepare and manipulate the data. We will want to find the slope of transition between the closing price of the day before and the opening price of the day after. We also want to find the slope of transition between the opening price and the closing price. Hence we will use the following equations and use Excel to manipulate the information. A lot of YouTube videos only use the open or close price to predict the information. I have found that it is highly inaccurate. Using the slope we can determine the correlation between the variables and use that in our univariate time series prediction model. Moving on to the code. We will first import all of our libraries. Numpy is for linear algebra and pandas is for data processing. We will be using the ARIMA model from statsmodels.tsa.arima.model, and sklearn.metrics to find the mean squared error. Then we shall define our training ColumnMetric and import our data. We then convert the date time to a readable format, replace all the empty data by filling it with the previous data, and sort it by date. Next we split the data into training and test data to test the accuracy of our model. We then build the ARIMA model. The first parameter is the lag order, the second parameter is the amount of times the observations are differenced, and the third order is the size of the moving window. We will only use the first two parameters. I chose 10 time lags for efficiency and 1 order of differential for removing spikes to get a fairly responsive prediction. We then run an extra cycle to forecast the next day's information. We then find the mean squared error of our prediction and print the predicted value tomorrow. You can repeat this test by replacing the ColumnMetric parameter with slope. Put in your parameters into Excel and you can use it to calculate the opening and closing price of the next day. Please like and subscribe if you liked this video. Thanks.